I'm going to talk about market a little bit, lamb market, market outlook, and a host of issues around that. And let's just jump right in. I'm going to talk about drought right off the bat, a bit of review, some demand stuff, some supply stuff, all on the lamb side, and really I'm going to, you notice I just said a bit of review. I'm not going to spend lots of time on that. I'm going to talk more about some conditions and market conditions that we have, I think, going forward. So with that as a bit of a view, we'll just jump right into it. I'm going to argue, first off, as we go forward, whether we're no matter what livestock market we're talking about, I really think this 2013 is what we might look back on as being a pivotal or critical year in all of our livestock industries, and it all has to do with this right off the bat. This is the drought monitor map from last week, January 15th, and if you look at where all the colored stuff is, that's where we have drought. And whether we're talking about our range livestock industries, cattle, sheep, lamb, look at where that drought is prevalent across the U.S. and think about where our livestock numbers are. And so the first part is there, no matter what our prices are, no matter what, whether we're talking about increasing prices or rebuilding herds or flocks or anything else, really starts with this. If there's no grass, you can't do any of the rest of it. And if we stretch that on into the corn belt, as you see some of those colors are, then we certainly talk about skyrocketing feed costs that we faced over the last year, and do we see any alleviation to that situation as well. So where we go in terms of drought, in terms of the corn crop, two different parts, one grass for herds, and the other part corn and soybean meal to feed those animals and all the other species. I think this is really a pivotal year, and it all starts with drought. As opposed to lots of other things we can talk about, I think this is where it starts. I'm going to make a couple more comments about this. I just got corn prices here, and the data I'm using is USDA, NASS, AMS data, most of it compiled by the Livestock Marketing Information Center. We try to work together so we're not all typing in data all at the same time, the same stuff. So, and Southern Plains corn prices being at Texas A&M, I use Southern Plains prices, and you can see the effect of the drought. We were already at historically high prices, and we all know why. I quit talking about the E word, except the E word, but I sort of, but you couple a drought on there on top of that, and we see corn prices skyrocketing, feed costs skyrocketing as well, and that's certainly the situation we're in with very tight stocks, really hinging on how we get to the next corn crop. I've got this chart here of corn production by year starting in 1988. Through 2013, I've got a projection for 2013 for a corn crop that underpins everything else I might talk about in livestock markets and this market as well. And with 1988 being the last sort of reference drought year in the Corn Belt, with production about 5 billion bushels, you can see we've trended to produce more corn. But we also use record amounts of corn, right? We use more than we've ever used in the past. What I'm going to suggest to you is that prices work in markets, and high corn prices fuel us to plant more acres and to ration use. My expectation is, or my projection for 2013 is, that we're going to plant at least as many acres of corn, 96 million plus acres, as we did last year. And what I'm going to suggest to you, when you plant that many acres, you don't have to have record yields per acre to have a record crop. You just got to have something that wasn't as crappy as last year, to be blunt, right, in terms of production per acre. So I take something about 96, 97 million acres of corn, 150 bushels per acre, which is well off the trend yield. And it's pretty easy to calculate a record crop, and if you have that, you get sharply lower prices for feed as well. So keep that in mind as we're going forward. But really, I just want to leave you with, I think, going forward, I think this is a critical year, and it all hinges on drought and the weather. A bit of review. 2012, not the Mayan 2012, but collapsing prices, higher costs, drought, consumer pushback or resistance to high prices, right? I think about our grocery store there in College Station that I go to with back last spring, rack of lamb at $18.99, ribeyes at less than $9, sirloins less than $5. The whole cryovac pork loin at $1.99. We see consumer pushback, growing stocks. Does that sound familiar? That covers New Zealand's market in 2012. And I was interested in the copies in the back, the stapled copy. That thing on the back's got a little article about New Zealand's market, a review of 2012. And if you take a lot of the writings about New Zealand's market, you know, that's part of that too. You see the same thing discussed there, and it sounds pretty familiar to what we went through. And I think the important part there is that we do operate in a world market, and that these same conditions we see occur have occurred worldwide, and that's got some effects on our own market as well. I would say we've been here before, or what's that, Yogi Berra? It's deja vu all over again. If we look back in land markets, the late 1980s, early 1990s, early 2000s, I think we could pull out some selected years also that saw many of these same conditions. Overfinished lambs, heavier weights, too fat, whatever. All the things we could list as being issues in our market in 2012, we've seen before. And really, as an economist, I'd talk about a lot of classic economic situations here with a non-storable product, an industry that's gotten smaller, more concentrated, industry segments that aren't closely tied together. And what I mean by that is we have industry segments that, if we look back historically, it's very rare for each segment of the industry, from ranchers and producers to feeders, packers, further processors, retailers, that everybody profits at the same time. Because how does one segment profit? We make money by buying cheaper or selling it higher, which means if I'm buying it cheaper, somebody else ain't making money, right? And so we have an industry, and this goes for all of our livestock markets, including those that are much more integrated, like chickens and hogs. You find the same situation. So really some classic economic problems where we have these segments not closely tied together, that profits hinge on what I do to the other segment. Not necessarily through any overt actions necessarily, but that's how markets work. And then we throw in a couple of more: demand pushback, or retail consumer resistance to high prices, relative prices, feed costs, and drought. You throw all this in together, and I think it's a classic economic problem, what we have. So let's go forward a little bit about demand, and I want to mention a few things and kind of set the stage for this. If we look at gross domestic product and the economy measured by that in the U.S., you can see those bars going down. They're red. They're kind of thin, but certainly the Great Recession, and then climbing out of that with relatively slow economic growth over the last 10, 12, 15 quarters, however long that is. Slow relative to periods of growth over the last few cycles. What I'm going to suggest that we continue to have growth, slower than perhaps some of these other quarters, although I think there are some arguments for some picking up of the pace of growth, but positive economic growth as measured by gross domestic product. I want to point out something about red meat and poultry consumption. This is all of our meats: beef, lamb, pork in the red meats, poultry is chicken and turkey in the blue lines. And I want to point out something. And I got a projection on here of consumption per capita. First thing I want to point out is, how do we calculate that? It's total production minus exports, because we sent that somewhere else, plus how much we import divided by population. And we adjust for stocks a little bit. What I want to point out is, really, if we look at 2007, pointer on that, does that work? You never know what's going to happen if you press one of these buttons. Hey, look at that. This is 2007. And our per capita consumption of meat, red meat and poultry, was 221 pounds per person in the U.S. in 2007. And what I would point out is, look at this decline over the last 5 years. We get to 2012, and we're at about 200 pounds, which means in the last 5 years, we've cut 10% of our per capita red meat and poultry consumption in the U.S. Well, what's gone on? Since 2007, we're producing less meat. We take every species there is: chickens, turkeys, hogs, beef, lamb, we're producing less. For some of those markets, exports have boomed over this time period. If nothing else changes, we eat less, don't we? If you remember how we calculate that. Well, why are we producing less meat over the last 5 years across all of our species? Costs are higher. Feed costs. And we can talk about ethanol as part of that. But our costs are higher, and the market transition or adjustment to that is costs go up, we cut production so that prices of what we sell go up, so we're back to making money again. What I would suggest is we're still in this adjustment period, and then you throw drought on top of this, and we continue to see our costs increase. And I got a little projection of continuing to decline red meat and poultry consumption as we continue to export more pork and poultry, and we produce less of our meats overall. I do have one of these for lamb, starting in 1989. Got a little projection for 2013 and 2014, but if we take this same period from 2007 to 2012, what have we done? We're producing less. Costs are higher. And in that case, we're in the same boat as everybody else if we, extrapolate that forward. I'll let somebody debate if I'm a good economist or not, but if I was a good economist, we often talk about it's not necessarily prices that matter, it's relative prices. And what I have on this chart is really pork, broiler prices and turkey prices. Pork is this dashed line, and the red line's beef. We don't really have a good retail price series necessarily for lamb, but if we look at relative prices for the other meats that consumers choose from, lamb's typically more expensive. But one of the things I expect to see that we are seeing now is lower priced lamb than it was last year at the retail counter, and a more competitive situation for lamb relative to these other meats. And we can talk about which one of these, if any, matter in terms of lamb demand, but for consumers, relative prices matter. And we particularly see beef increasing relative to those other meats. Demand factors, slowly growing economy. I think it's a basis for some income-driven growth. We got price competition, which has certainly been a disadvantage and certainly was in 2012. And one of the things that's going on is we get prices that are too high and consumers don't buy the product because of prices. We got to take some time to rebuild demand that was damaged by high prices and quality. And I think that's certainly a situation that we face going forward on the lamb side. A little bit about supplies. Inventory numbers, just starting in 1987. I expect when that inventory report comes out in next week, the 1st, I expect we're going to be smaller. It's tough to go the other way. Look at what's happened to prices and look what happened to drought. It's very difficult to see any other conclusion to that other than driven by drought and costs and prices. If we look at commercial lamb, this is just commercial sheep and lamb slaughter. This is the 5-year average, 2006 to 2010. A dashed line is 2011. The blue line is 2012. Just simply looking at slaughter, certainly we were a little below 2011 early in the year, but higher later, and really on the same pace, quite honestly, as 2011 in terms of slaughter. But as we all know, weights push our production higher, and certainly did. And if we just look at dressed weights, federally inspected dressed weights for sheep and lambs, weights were higher almost the entire year. And I think this is really, indicative of working off those lambs on those supplies that we had that were the big ones, adding much more weight to the market, and certainly having a price effect as well. Through 2013, 2014, I think we get back to weights that are much more indicative of the last 5 years. If we throw out last year in 2011, we get back to carcass weights that are back to something we might call a more normal kind of level rather than reflecting 2012. If we put that together, slaughter and weights get us to production, and it's pretty easy to see we end up with more production than we did the year before. And if you get more supplies, you usually get lower prices, exacerbating the problem that we were already in. I've got some commercial lamb and mutton production, 2013 projections, 2014. This red bar is a 5-year average. We got 2012 and 2013. I expect production in 2013 to be well off where it was in 2012 for, and like you'd expect, 2 parts: lower slaughter because we got fewer lambs, fewer ewes, and lower weights. You know, I would suggest that more than half of that decline from 2012 to 2013 is going to be on the weight side, getting weights back in line with what we would normally expect weights to see. And so, you know, if that's something, maybe a 9% decline in 2013 in terms of production, more than half of that comes from the weight side rather than the lamb side, which I think if we tie that back to inventory, we get a smaller inventory of ewes, but not as big a cratering as this production might suggest. That we do have fewer ewes for good reasons: drought, high costs, and what's happened to prices. But getting weights back in line, I think, carries most of the share of getting production back so we don't have those year-over-year increases. Gosh, you got to talk about imports, right? This is as a percent of production. Starting in 1989, we get to imports that back, you know, 2005, 6, 7, that are roughly equal to how much we produce. And even if we look as a percent of production, we've actually had a little bit of decline in here as a percent of production. I think it reflects a bunch of overall market conditions in a world market. We import from Australia and New Zealand, and they have other competing markets for what they're selling, whether it's Europe, Asia, and those places. So, but again, staying in this, basically this area here, which I think supports the notion that we will continue to have a little bit less total supplies on our market over the next couple years. And this is just monthly imports. I think we've talked a lot about, well, it must be imports wrecking our market, adding all this tonnage, which we've certainly seen in the past, haven't we? Imported lamb really covering up our markets. And if we look at 2012, we certainly were importing in terms of volume less than we did in 2012. And in fact, in this part of the year, less than we did on average over the last 5 years. Although, you know, quite honestly, we're pretty close in this period later in the year. But in terms of volume anyway, I don't think the data supports that we covered up our market with imported lamb. Although lower prices worldwide have an effect here just like they do everywhere else. And we are competing with a product that's lower priced in terms of imported lamb. And you have a slow economic slowdown in Europe that reduces exports from those countries to Europe, or cuts into their markets, or cuts into their prices. Where else can they sell to? We're one of those markets. Some supply expectations, a little bit smaller inventory, getting weights back to normal. Still continued strong competition from imports. I was going to leave out a price chart, but I figured, heck, I better put it in there. This is just simply a 3-market average of feeder lamb prices. We all know about this decline here. I was doing some lamb work back in this time period, and you know, we looked at historically some of these other price wrecks we've had. How long does it take to work itself out historically? 6 months, 8 months. Well, we were sort of well into this already. I thought we had done a lot of that work already. But quite honestly, there were just simply a lot more lambs still to move. But I think part of this, you know, I don't think we should underestimate the effects of really feed costs as the drought hit, as we saw how serious it is, on these feeder lamb prices throughout this time period in terms of adding a little more pressure on lower prices. Certainly the incentive to feed more was certainly not there. And so we pull some of that live demand out of there, and I think that pressured our prices a little bit further than I otherwise expected. What I would point out, and getting to some price expectations, so far starting the year we're a little bit higher than on average, and we're a little bit higher than we finished the year in terms of lamb prices so far. One of the things I would expect in terms of price projections for this year and going into next year, that we're going to stay lower than we were a year ago. in terms of prices. Be pretty tough to get back. That ain't such a tough projection, is it? But I think when we get in the second half of the year is when we talk about things being a little more interesting with prices. As we work through weights, we get those back to more normal. Production reflects those weights and reduce supplies, that we actually start having land prices recovering, and we start running prices that are above a year ago with this large price break. And for an annual average, both for 2013 and 2014, I have average prices increasing in 2013. Remember what we're averaging last year, over $2 and $1. So you get about $1.50 for an average. It's like the guy that, one foot's on a block of ice and one's in a fire. On average, he's pretty comfortable. We look at annual average prices. I think we get back to some increase in prices based on less supply, some demand recovery going forward, not only this year but next year as well. I included this just as a frame of reference to look at just how high prices got historically, and this just goes back to 2007. As economists, we talk, there's lots of talk in the economic press and stuff about bubbles, market bubbles, and that gets economists fighting about what is a bubble? Do they really exist? How markets work? Most of the times you don't know you had one until it's over. What's that look like? I'll move on. Price expectations. Average land prices lower than last year in the first half of the year, but I think higher in the second half of the year. And I think trending higher over the next couple of years based on this story, if my story hangs together in your mind. I think demand supports some prices with time. And I think it takes time to recover, to rebuild demand based on what we've gone through over the last couple of years. But a growing economy certainly helps, but pretty tough price competition from competing meats and from foreign lamb. Is that my last one? Thank you. That's my last one.